Morning, everybody. It's Friday, the 18th of June. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning.
How you doing?
Yeah, very well, thanks. Looking
All
forward to the
set?
game later.
Yes. You see the state of Leicester Square this morning?
No, was it bad?
Yeah, all the Scots who flew down yesterday were packed outside the Weatherspoons and all the pubs along Leicester Square. They were all jumping in the fountain. They filled it up with fairy liquid, so it's all foaming and floating round. About
Brilliant.
20,000 of them apparently come down.
Bloody hell.
So it
Excellent.
will make for a fantastic atmosphere in Wembley if a few of them get in, or certainly, in and around London. But as long as they behave themselves, don't cause any fire. I don't care what they do to the fountains, but
Yeah,
there's
well,
no
they're good. They're coming
violence.
down and they're cleaning it for us. That's what
Yeah,
it sounds
exactly.
like.
Yeah,
Happy
and by them
days.
jumping in to the fountain, they're having their first wash probably a year as well. So
Oh, that's really insulted a lot of Scottish out
hi,
there.
Scotland.
I'm sure we've all got a little bit of Scottish in us anyway, Joe. If we
Yeah.
go back here, in the sort of
Quite possibly.
was it the family tree?
Yeah.
Yeah, no, but it should be a good atmosphere, and hopefully it'll be a good game. And obviously, being Irish, I don't really care who wins.
Hey,
Win or lose, we'll
claim
have
that when
some
it counts.
booze.
Yeah, fair enough.
And if we draw, we'll have some more.
Yep,
Something like that.
absolutely. Okay, so on to the markets then. So again, some decent talking points, a few bits going on. Commodities taking a smashing yesterday, by the looks of things. Pretty much most of them wiped out their entire gains for a year. We saw soybeans do that. They raised their 2021 advance. Corn and wheat have declined recently. Other commodities have seen rallies evaporate, like platinum, nickel, sugar, lumber. All of which are retreating on the back of the hawkish Federal Reserve comments and also the action from China, where they were trying to curb the speculation that was going on in these commodity markets. So Steve will come on to some charts on that shortly and give us an update on how things look from that front. There's still some more goings on with regards to Northern Ireland and the UK, all very boring, but it does have some impact on certain things. But other than that, not a whole lot more news really, to be totally honest, but there is plenty going on in the market, so it gives us a chance to jump straight into the charts. Steve, do you want me to go first, or do you want to go first?
I'll go first.
Okay.
I'll throw everyone today. I'm start with cryptos. Let's get my water bottle out of the way and let's talk about this. So cryptos, we've rejected the 41,000 level, or this 42,000 was the top of the left shoulder in this head and shoulders formation. This is the scariest formation I've seen for a long while, and I hope and pray it doesn't play out, because as we said, the measured move target of this is negative 4,000. So I would have always said that can never play out. It can't go below zero. But then I watched Spot Crude last year, which did exactly that. So yeah, we've got support coming in above the 28,800 level. Really, 30,000 was the previous swing low, and we stalled in front of there. We formed the right shoulder. Now, potential is we break above the right shoulder and continue the up move, but we've got a long way to go before that. But we've seen on a weekly chart, we've seen a shooting star candle. That's ominous for me. So I think Bitcoin is going to see some more pressure over the coming weeks, and I still believe we've got good potential to get down to at least the 18,000 to 20,000 level. Looking at the daily chart, just give you a little bit of a insight into Elliott wave. Has 5 waves, 3 impulsive, which is moving in the trend direction, and 2 corrective, which moves against. So we have 1, 2, 3, 4, and wave 3 is not normally the shortest. So I presume at the moment wave 5 can be an extended wave. Anyway, cryptos, got that out of the way. Let's go on to commodities. in terms of Elliott wave, I think we're in the fifth and final wave of this impulsive move higher, like we just talked about from the lows. From this is $10 on this chart. 76.80 was where the serious resistance comes in. We did sort of like try and push up higher this week, got up to 72.70, but wasn't able to extend. Again, weekly candle looking a little bit sick, a little bit of a shooting star. Indices, we've opened and we're currently closing where we opened on Monday, so that's a sign of indecision. Maybe that's enough to start the ABC correction, which we expect after the fifth wave finishes. Gold, now this is the daddy that we've been sort of calling okay as well. We've stalled at 1916. That was 3 weeks ago. This week we've seen the break of the 1855 and 1845 support, which we had on a shorter term basis. Let's jump into that. On the 4-hour chart, it will be highlighted a bit better. We had initially signs of reversal. We had this head and shoulders formation. We had a swing back to retest the neckline, which if you extend that through, this sort of like didn't get above the right shoulder, so that was bearish. Bearish engulfing, bearish outside candle there, bearish outside candle there, forming a double top formation. It broke below the neckline, which was 1876. Since there, it hasn't looked back. We managed to break previous support levels at 1855 and 1845, got down to 1845, had a correction higher, and again was capped at 1870. And then when we did break the 1845, that was it. We talked about this in the week. We said if it breaks 1845, we're going to see a fast move lower towards 1800, which we did. And then below that, we've got great support coming in between 1755 and 1765. We've stalled just in front of there, 1767, and we're seeing now a corrective move higher. Now, I know it's a bit hindsight trading, but the reaction from there, this inverted hammer, let me get rid of the price and show you that. That's a bullish candle, especially after an extended move lower, a fast accelerated move. It's overdone, and there's a good chance that we're going to get a correction off there. So that was a bit of a buy signal. This was confirmed by the following chart. So worst case scenario, could have got in at around about $1,780, trading at 1792. Good potential for a retracement back to, I think at the moment we've got between 1805, 1825, but 1845 for me is probably where I would really look to fade any sort of correction higher. We still are negative. What happens sometimes when we get this sort of really fast reaction, we get a relief rally, then we get a retest, and then there's the potential for either a double top or the continuation of the move. If I'm looking for some real decent support levels on here, I'm really looking at 1675. So that's about, well, close to well, 120 points away. Sorry, $120 lower. We've got other interim resistance coming in at 1723, which we saw some decent sort of congestion area back here, and obviously this is why, you know, this was a great resistance level, now turned into support between 1755 and 1765. So that's the levels to watch in gold. Indices. So FTSE has given up the sort of chase higher a little bit. It's broken lower this morning. We talked about a supportive level coming in around about 71.37. It's broken below that and trading at 71.22. There is still support. We've got upward trending support and the Ichimoku cloud coming in here, and you can see horizontal levels going back as well, 71.06, and 7 below that, a bigger level. Maybe 71.06 for me is the level to really watch. That comes in with a trend line, and but below that 70.40. I don't think we'll get there today, but you sort of never know. Upward trending support line on, let me just change this from a dotted line to a straight line. Looks a bit more supportive then. We've got a double top potential formation on the DAX, and we're looking at it's broken below the neckline, failed, and it's pulled back above. It's almost forming a little something that resembles head and shoulders topping formation, but not really. So not going to get too loved up to that. But really for the level for me to sort of like see any extended move to the downside would be a break of 15,618. If we break that, we've broken below the cloud. We've also broken below the swing low. That will open up a move, an extended move lower to retest the supportive area between 15,550 and 15,000. So that's the one to watch today. On the upside, we need to get back above 15,760 quickly to negate this bearish potential and get back on the horse and ride it higher, like the indices seem to do all the time. So Dow's under pressure on the US side of things. It's broken below the trend line and it's now in quite a nice little channel lower. Let's see if we can get some sort of decent channel formation. There's a quickly drawn channel formation, just reacted off the point where I've picked as a low, obviously, and really that will sort of form some sort of support, and we'll get horizontal support from back here as well. So around about 33,600, we should find some support, but really the real scary level to watch is 33,290. So a little bit of a way to go to there, about 500 points. So I can't really see that today, but again, it's only 1.5% probably, so it's not that far away. Nasdaq has a different story completely. Tech stocks enjoying this ride higher, new all-time highs. Yeah, so a bit of a play there between the sectors. S&P's is caught in the middle a little bit. It's under pressure along with the Dow, but it seems to be holding on. I've got supportive levels below the previous resistance, now becomes support. That comes in at 4,183. Really, if we get a break below 4,190 and a close below there on a daily basis and a weekly basis, then I think we should get some follow through next week. If we don't, if we manage to get back above the resistance now at 4,232, then that should open up a retest of the all-time highs, 4,268. China 50 for me is the one to watch. This is a really horror show of a indice, and I don't think that's going to stop at the moment. We've got sort of like some serious supportive levels, but they're getting closer and closer. 16,500 for me, a break below there and a close below there is sayonara, baby. And that's it.
Steve? Okay, so on to FX. Dollar index is still where it's at for me. So on the back of the Fed comments the other night, we did see a pretty significant move to the upside. As you can see, this is the weekly chart. Got these green arrows on here, so we are suggesting that maybe a double bottom is taking shape. In order to complete that pattern, it does need to break above this 93.43 level, which is the key resistance on the upside. If we can take that out, then we will be measuring a move from these lows to these highs here, projecting it higher, and that comes in at a measured move target around about 97.66, which coincidentally also marries up with a 61.8% fib level from these highs back in March last year to these lows that we posted in January at 97.72. So really quite a nice target area on the upside if we are to see this break of this resistance and this continuation higher continues basically. So on the daily chart, we have taken out quite an important level, I think, which is this blue line here, and that's important because it's a big long-term resistance line. As you can see, we've powerfully got through this this level. We've taken out resistance at 91.43, and now we can start targeting this gap that's unfilled at 93.02, and then that key level that we mentioned on the weekly chart, which is at 93.43. So all looking pretty good for the dollar index at the moment. I wouldn't be surprised if we did see a little bit of a pullback to maybe retest the reverse side of this trend line, which would be a nice area maybe to start getting long again for a continuation higher on the dollar index. So looking pretty strong on that front. If we look at euro dollar, It's the flip side of what we've just talked about on dollar index. So we've broken down quite considerably through some support levels here, as were illustrated by these red lines. The lowest one at 119.86. No sign of it getting back above that, although again, I wouldn't be surprised to see some sort of retest of that level, maybe before a continuation lower. Now, I've drawn on a head and shoulders top pattern here, a potential one at that. I've been talking about this for a number of weeks, and that it could be starting to form, and it looks like it's getting closer and closer. So the next test is this neckline down here, which comes in around about 117.65 today. That would officially confirm the head and shoulders top, but I would prefer to see it break this low here, which was posted on the 31st of March at 117.04. I just prefer seeing breakdowns of horizontal lines rather than uptrending or downtrending ones. So that's the key level for me to watch. And if that does indeed break, then we can potentially measure this move from the head down to the neckline and project it lower. And we'd be looking at targets of 110.56 on the downside, and we've also got a 78.6% fib level, which is in and around that vicinity as well. So potentially some deep targets on the downside to target on euro dollar if this weakness continues to persist. Looking elsewhere, Aussie dollar is potentially on the cusp of completing a top pattern. It broke down through this support level at 76.45 on the back of the Fed announcement earlier in the week. We're now down at what I'm suggesting is a neckline of this top pattern. I've drawn on this sort of rounding formation that's taken shape. We also got a 50% fib level here at 74.99 or 75.00, so a round number as well. And we've had a little bit of a bounce from that so far today, so maybe we'll see some sort of resistance from the bulls and try and buy it up from here. But whether or not this support holds remains to be seen. If it doesn't hold, then obviously we are projecting lower prices, and obviously that will be led by a continued strength in the dollar index, and we'll be looking for lows down here potentially at sort of 70.60. So again, potentially on the cusp of a much deeper move there on Aussie. If we look at New Zealand dollar, US dollar, it's the same sort of thing, although we haven't had a poke at this support level yet at 69.43. We've got kind of close, but the buyers have stepped in. We have to wait and see how much firepower they've got to defend this level. If it doesn't get defended, then again, we've kind of got this rounding top formation that's taken shape, and we can start projecting lower prices. The measured move of this top pattern is down at 64.27. Cable. So I was looking initially for just a gap fill, really, and a retest of this trend line, but the trend line looks as though it's given up. And this trend line goes back down to these levels here that we posted back in May. Obviously, we did go quite a bit lower on the sort of overextension on the back of the pandemic beginning back in March last year. But we've got multiple touch points along this trend line here, so I'm using that as a preference. We've broken that trend line, we've broken that horizontal support, so maybe we are going to see a continuation lower here as well, possibly within a bit of a range formation. Maybe what we would actually form here is a double top if it gets down to this neckline here. If it breaks it, then we can be projecting lower prices to somewhere around there, which is at 130.97. So all quite interesting, all being led by the dollar and the strength that we're seeing there. And obviously the big question is now whether or not that trend is going to persist higher, whether it's correction or whether or not it's the start of a wider move. Judging by the patterns that we're seeing on the daily charts for some of these currencies, I'm more of the opinion that we've actually formed a bottom in dollar index because of the top formations we're seeing in other currencies linked to the US dollar. So we have to wait and see. None of them have actually confirmed yet, but they're getting pretty close. So it's coming to sort of last chance saloon for the US dollar as to whether or not it is a bottom pattern or whether or not it's just a correction within the downtrend. So maybe next week things will be a little bit clearer on that front. Finally, I just wanted to have a quick look at Canadian dollar. It's another example of whether or not the dollar is going to continue moving higher here or whether or not it's just going to persist within this downtrend. This is the long-term chart on Canadian dollar US dollar, Canadian dollar. As you can see, it's been trading in a wicked downtrend channel here. It's now bang into the downtrend line, and also this resistance line that was posted from the lows back in March. And it's stalling at the moment. So a really interesting point. If you are of the opinion that the dollar is just having a flush out and going to continue lower, this is the point you want to be getting short of US dollar, Canadian dollar for me, because it's banging into these resistance levels. So you can do that with quite a tight stop. And if it is going to work, it should work fairly quickly. If it does break out, then obviously we've broken out of this channel in this wedge, and it could create an even bigger correction to the upside. And then my first target there would be up at that dotted line that we've got at 126.47. So some interesting stuff happening in the FX markets.
Yay, at last, Joe. How do you
Yay.
feel? It must be great for you.
Yeah, I can chat freely. I'm not umming and ahhing. There's lots to talk about, lots of technical
absolutely.
bits going on. So, you know,
You're a different person to a few weeks ago when it's it's Groundhog Day, nothing going on.
Yeah, also helps that
like
it's Friday and England are playing today. So,
Yeah,
mood is improved.
There's a bit of a buzz there.
Yeah.
Yeah, like that. Thanks for that, Joe. That's you've sorted my gun to head challenge out anyway.
Cool. Right, we're talking of guns ahead. Stevie boy, you were nailing it at the minute. You just whacked in a 5R win on gold yesterday.
Oh, just you throw enough SH1T at the wall, and some of it sticks.
I was stopped on cable, but it doesn't matter because Steve's got my back. He's firing in some massive winners here. So you have actually gone to new highs on your P&L since we began this journey back in October 2019. So you're up at 32R, and it's all happened, after a big period of consolidation, and whack, just doubled your P&L in a very quick space of time.
Yeah, the win rate's pretty shocking. 40% just below 40% isn't very good. But obviously, you see me doing these trade ideas every day, and a lot of the time I am going for these outsiders. So the win rate will be lower. If I was a bit more steady Eddie, then win rate would be higher. But yeah, this is a bit of fun, but a little bit of a challenge between ourselves as well. So just take it with a pinch of salt, everyone.
Absolutely. Okay, so Steve, you're on hot form at the minute. Just round up for the month, you have put 12.7R on the board in June.
That's not bad. I tell you what, if we do that every month, that's not bad. If we compound that as well.
Yeah, big returns.
Yeah. I don't know whether I'll have any funds knocking on the door just yet.
No. You need 3 years worth of books, Steve. So.
Is it? Okay, let's just fast forward then, yeah. I'm not doing anything for 3 years, and I've got a 4% per year return. That's not bad.
Happy days. Right. So, what you got this morning?
Well, yeah. After your rundown, I'm pretty much. People should know that by now. I'm a bit of a contrarian trader, so I like to look for the sort of like the going against the trend or the potential. If there's good potential at certain points, then put the risk on at that point and go for a big win. So the dollar, for me, I agree with you, Joe. It could be a bottoming pattern, but it seems to be we're at levels of decision. So that means that we're at levels of resistance for the dollar index. If we look at the weekly chart, it's broken up to the weekly. It looks like it's going to close above the weekly unless we get some sort of huge reversal today. On the daily chart, it's early in the day, but it's forming a bit of a shooting star, so it's a bit nerve-wracking. On the hourly chart, 4-hourly chart, we've seen a big correction in the since 8 o'clock. This is taking it from, so this will carry on till 12 o'clock. If we manage to get below 91.81 by then and close below there, then that is bearish for me on a short-term basis. The hourly chart's already done it. Hourish, bearish, engulfing, nearly a bearish outside candle if it had engulfed the high of that previous candle. So it gives me a good opportunity to put a decent risk reward trade on, have the stop really tight, just on the sort of like around about the highs of this move up. So let's go. What am I doing, Stevie boy? We're looking at 92.08. we're looking at there's my stop. Getting short here at 91.90 and a half, stop at 92.10 and a half, which will be a new high. And I'm going to go with just a 4-to-1 shot today. You know, I know, call me old fashioned, call me defensive. 4-to-1 shot, still a sort of like a big trade idea. And that's what I'm going to go for. Selling dollar index just on a correction, because we've had a very, very good week for it. Profit taking comes into account today, Friday. Not many people like to hold things over the weekend, so that's another reason.
We've also got expiries today.
Yeah, that sounds good. I wish I knew what that meant.
Triple witching.
Yeah. I know the names, I know the words. I don't know what it means.
Yeah, so the options are
I'm just
expiring,
too
so that
technical
may
for that.
have an impact in repositioning of positions.
Yeah, of course, I know that.
Okay, cool. I'm going to take a look at some dollar links as well, because when I was going through my charts, I kind of talked myself into this one, which is US dollar, Canadian dollar. So I had a really strong move to the upside, broken out of that mini sort of consolidation you can see at the bottom end of the channel. Really pushed up quite aggressively and now into some key resistance levels. So has he got the legs on a Friday afternoon to break through that? I'm doubting it, to be honest. So therefore, I'm going to try and fade this. I think there is potential for it to break, but when you see these fast moves up without any sort of check back, it's very rare that they sort of get the continuation to burst through that and have enough to go. So I'm going to try and fade it here anyway. So this is the intraday chart. Highlighted a bit of bearish divergence here as well on the RSI. So the oscillator is not making new highs, but the price is. So that's where we get divergence. So going to sell it now at 123.69. Quite a tight stop. I just noticed that was in front of a round number at 23.99. So I'm just going to go a couple of ticks above, 5 ticks above. 24.05, if it'll allow me to do that. So 37 ticks as a stop, and I'm going to target a move down to 122.86. Really boring from a risk reward perspective, actually, only 2.2R, but they all count, and I would be delighted if that plays out from here. So that's my trade of the day.
Nice one.
Okay, not much on the news front today, actually. We had quite a bit of UK data out already this morning. Retail sales provided the main event out in Europe for the UK, but that was disappointing, reading of minus 1.4, largely being put down to poor weather conditions despite the easing in restrictions. Other than that, there is nothing of any high impact due out today on the calendar. So we'll wait and see what happens.
Yeah,
Might
have
be
a good
bit of
day,
a
everyone.
sesh. Yeah, cool. All right. Well, yeah, have a great weekend. Come on, England.
Yeah, come on, England. Come on, Scotland. Yeah, let's both win.
No.
Yeah, enjoy the football
Yep.
later. And we'll see you next Monday.
Yep. See you on Monday.
Cheers.
Bye.